What's up, everybody? Zach is back with another episode of Journey to $1 Million. And yesterday was all right. Tech was up, semis were up, so my portfolio was doing all right. Dollar cost averaging seems to be working pretty well for us. Not anything crazy interesting going on with the portfolio, although I was up about 5%. I mean, so far, so it's all right, doing all right. But of course, that's mostly due to the Nasdaq moving up a lot, triple Q, SOXL, and just in general tech and semis. Also TECL, don't forget about that one. That one is also a really good 3x tech. But anyways, I'm still waiting for the triple Q to come up to the 50-day moving average, which it is. I mean, it's almost up there. It's just touching on the bottom of the 50-day. So we're still waiting for that to cross the 50-day moving average. But yeah, I mean, pre-market is looking good. Nasdaq is up 0.3 pre-market. So the T triple Q is up about 1%. So we'll see how today goes. So far it's looking pretty good. Most of the time that I spent yesterday was dollar cost averaging into my longer term positions, and some of the newer ones like the Pershing SPAC, just the SPAC-X ETF, the BUZZ Buzz, OGIG, just things like that. Also print, the PRNT, the 3D printing ETF. So I mean, I'm still kind of dollar cost averaging into these. I want to see a good 2 days above the triple Q above the 50-day. Once we see a good 2 consecutive solid days, then I will feel just my conservative brain will feel much better about spending money on these smaller and shorter term positions. But hey, that's just my style. Maybe some of you guys are more risk adverse than I am, but that's just the kind of feelings and the kind of vibes I'm getting over here. I think it's still going to be a little bit choppy. I mean, to be honest with you, the 10-year it actually came down a lot. Currently it's 1.65, so it's actually down even more. So that's looking pretty good for tech. But we will see how it goes. We will see. My eBong put is doing rather well, actually. It's dropping off quite a lot. This is a total BS company, and you will see that coming up, I assume. Although everything Bitcoin is just so hot right now, so I mean, who knows, really. But yeah, we'll see. And nevertheless, overall yesterday the S&P was up 0.8%, Nasdaq 1.3, and Dow Jones was 0.38. My best picks yesterday was the SOXL, which was up more than 8%, VACQ was up more than 8%, and also the Volkswagen VWAGI was up 8.5%. Now that is on the European market, so you would have to find a broker that can OTC that one. But I think that's no problem. If you really want it, you could do it. And today is just one of those days. I only feel like adding one to the watch list, and this was one pointed out by one of my followers in the Discord, link in the description. And hey, while you're down there in the description section, go ahead and smash that like button 1,000,000 times because we need $1 million. And that really does help me out. And go ahead and follow me on Twitter and subscribe to the YouTube, because we post every single day the market is open. I'm posting these updates on Reddit and YouTube and whatnot. But go ahead and follow me on those social media. So the only one that I want to add to the watch list is actually CBD, and I cannot pronounce this, so I don't even know if I want to try, but it's Companhia Brasileira de Distribuição, doing business as GPA, formerly Grupo Pau de Açúcar. So, I mean, any Brazilian people, please teach me some better pronunciation. I have no idea what those letters sound like or what the syllables sound like or whatever. But hey. And anyways, this is the biggest Brazilian company engaged in business retailing of food, general merchandise, electronic goods, home appliances, other products from its supermarket, hypermarkets, and home appliance stores. And this is actually owned by the French conglomerate retail group Casino. Its headquarters are in Sao Paulo. And it's the second biggest retail company in Latin America. So this is a pretty big company, and I don't really know too much about it because I don't really know too much about Latin America in general. But I did some research after this was pointed out. It's a really big company. Seems pretty interesting as a retail play these days. I mean, what do you want to do? Walmart? You want to do Kroger was another one, Target, I mean Amazon, like these are all the interesting retail plays as this transition is going on, the opening up of not just the states, and I mean we talk about the US opening up more often, but actually other countries are opening up too, and so Brazil is a very big market, to say the least. So this can be pretty interesting. I was thinking about it. And then I was looking into the PE, and actually their PE is only 6.8, which is very low. And actually it's doubled in the last few days. It was like 3 or 4 a couple days ago. But nevertheless, it's still 6.8, which is really low for a retailer of its size. I mean, if you look, and by the way, what that means is you're basically paying less per dollar of profit generated. You're paying less for their profit. So I just wanted to give you a little comparison, but Walmart is $28 PE right now. Amazon is a 74 and Kroger is a 9. So let's go ahead and look. I will actually just show you guys what I was checking out. So yeah, their PE is 6.85 right now, and that's over the past 12 months. But their the PE going forward is 46. So obviously the market is kind of feeling out that, hey, I think there's going to be a decent amount of growth coming up. That's what the forward PE is. Kind of shows you how the market's feeling, what people are thinking, predicting going forward for this company. Maybe future growth, or if it's smaller than the TTM, then it would be not a decline in the growth. But anyways, and then actually the PB is of 0.5441, and the PB is if you liquidated all of its assets on its book. So for example, the liabilities and any other assets, and you just totally liquid, the company would be totally liquid, then that would show you about how much per share it would be worth. So anyways, actually, and this actually does have a dividend of 2.78%, so this is not very bad. I mean, it's kind of interesting. As for a retail place, so it's still lower than it was COVID. I mean, gosh, just a couple days ago, it's even lower. So this is pretty interesting, and especially as things start to open up. But there is some news about, let's see, where is it? Yep, they're possibly buying this Cnova. But anyways, we're not really sure about that. So if you have Webull, you can see this news stream right here that I'm showing you guys, and you can see all the news. And I use this a lot for my research. So link in the description if you want to do this. If you want to download the Webull desktop app or mobile app, it's totally free. But if you do deposit $100, then they're gonna give you a couple free stocks anyways. So go ahead and use the link in the description. Help me support this channel. I mean, that would be awesome. And this stock is actually up almost 4% pre-market, so it's pumping up. And I think soon it's going to get back to the pre-COVID levels. So in between 6.5 and 7. I went ahead and put a target of 7 on this one. I feel pretty good about it since the PE is just really low. But yeah, Kroger is $9, Walmart is $28, Amazon is 74 PE. So just keep that in mind. I mean, do your own due diligence. That's just my thoughts. If this one does dip down, which I don't know if it's going to, because it seems to keep pumping, but if it does, then I would be interested in getting into it. If you just want to buy common shares and take advantage of their 2.78% dividend, then you can always, just dollar cost averaging all the way down. But I would be more interested in an option type of play, because I don't want to put too much money in it. All the dividends look pretty interesting, but yeah. So I would put it as a risk of a 3, and mostly I decided at a 3, not a 4, because the PE is just so low. And anyways, I gave it a time frame, 3 to 5 months. So I think just give it some time. I mean, it should get back to pre-COVID levels. I'm feeling pretty good about it. I don't think it's very risky. Of course, I want to get this cheaper, so I would wait until it drops into the buy zone here, which pretty much I just put the buy zone closer to the 50-day moving average, which it seems like it's trading along if you look at the chart, the day chart. But anyways, guys, that is pretty much all for this video. I don't want to get into too many positions these days because I really want to see 2 good days above the 50-day on the triple Q. And it's just my personal opinion, but we'll see how it goes today. I mean, hit me up on Twitter and let me know how it goes. I'm going to be posting the trades there as always. And guys, don't forget, I do the one-on-one, so if you have any questions, if I'm talking too fast or you want me to just give my opinion about your portfolio, we can screen share on Zoom and get into some details of, what is a vertical spread, what's an iron condor, should we buy an iron condor, should we sell an iron condor, what different types of option strategies can we use, for specific market situations. So if you want to get into some a lot more depth in the details, go ahead and hit me up on my website, the contact section of my website for to schedule a one-on-one, and we can do a trial one-on-one. So anyways, guys, keep in mind the risk is on a scale of 1 to 5. 1 is the lowest. I want to put more money in the 1s. 5 is the highest. I don't want to put so much money in the 5s. But yeah, go ahead and please like and subscribe to this video. I really would appreciate it. But anyways, guys, as always, I do appreciate you, and I will see you on the other side. Peace.